Hello and welcome to CRUX Investor. We're here today with Amanda van Dyke. She runs South River Asset Management, one of the best performing natural resource funds here in the UK. Good afternoon, Amanda.
Good afternoon, Matthew.
I think you're going to tell us a little bit about Cardinal Resources, the
Yes.
West African gold development company. So tell us a little bit about your thoughts on them.
Cardinal is a great project, or it's a couple of projects, but its main asset is a 7 million ounce Ghanaian project. 4 million of that is sitting in reserves, and it has a nice tidy mine life with over 200,000 ounces of production, great IRR, and they're in the middle of producing a bankable feasibility study. And to do that,
when's that due?
I believe it's due in the third quarter, but I would have to check that.
Okay.
But that bankable feasibility study and the subsequent financing should be a real catalyst for a re-rating of the company.
Now you've told me something in the past, which is a BFS and a DFS are effectively the same thing, except the bankers like to say, we'll tell you when it's a BFS, until then it's a DFS. Is that right?
So officially, a company produces a DFS, a definitive feasibility study.
Right.
So it is how they plan to build a mine.
Economically, and the economics around it, I should say. Right.
With to a high degree of certainty of the economics and the timing and the contractors they'll use and all of that sort of thing. Now, once they have that definitive feasibility study, they need to go to the market and raise a combination of usually debt and equity. The debt comes from banks, and when the banks agree to finance it, then it becomes a bankable feasibility study. So it's a feasibility study that the experts at a bank have deemed reliable. Right. I think Cardinal's eminently bankable, and very interestingly, one of my other favorite mining companies that we just discussed, Centamin, two people from Centamin have come on board.
That's right, yeah.
At Cardinal. Trevor, who is helping them with their DFS, and who's the mining engineer who's going to oversee that process. And then also Kevin Tomlinson, who is on the board as well. And between the two of them, they developed the DFS and ultimately the BFS at Centamin, and they built it and put it into production. So they're both very experienced at getting this done. And it's interesting that they've both chosen this project to join.
Yeah, interesting for sure. I mean, obviously that's got to be their key focus, delivery of the DFS. It lets everyone know where they stand. So do you think there's some value in the business today?
I think there's a huge amount of value. Let's be realistic. They have 4 million ounces of reserves in Ghana, which is one of the best jurisdictions in West Africa for mining. It's an established, respected, and consistent gold producing region of West Africa. Those ounces are worth something and are economic at $1,000 gold, frankly. So there is no question in my mind that that is an economic project that is going to go ahead one way or another. In an increasing gold price environment, it just becomes more valuable. And with people on it who are associated with the project, who have come on now at this next stage of their development, who are established African mine builders, I think that shows a lot about the management's ability to bring on mine builders and move the company to its next stage of development, and also about the seriousness of this company's intention to put this into production. Very interestingly though, their CEO, Archie, who's a great guy, but he's been in Ghana for 25 years and has an incredible sort of relationship with the mining community there. He's working very much with the team developing the DFS for publication. He's also working pretty hard, and they've got some drill results coming out of a second site not very far away from their primary mine development that's been producing some excellent results recently. So I think that there's also scope for potentially a new resource coming out on that new exploration ground.
Interesting. So do you think this is an attractive business for one of the mid to large caps, or do you think there's a genuine belief that they're going to get this into production themselves? Or is it just optionality at the moment?
Personally, I don't think you build a project for someone else. You have to develop a feasibility study and develop a plan to build it by yourself. There's no other way to do it. You can't depend on a buyout. That's just not a realistic option. Now, the guys who work really, really hard at trying to build it themselves, more often than not, they're the ones that end up getting bought out, but that doesn't mean they will. That's a buyout's market dependent. It's dependent on so many things. It's not something that you can bank on. So I think that this team is quite experienced. They know that, so they're developing the plan and the DFS and working on their exploration ground on the understanding that they need to build a standalone company. Whether or not it gets taken out at a later date, it is to be seen, but their best chance of, frankly, being taken out at a later date is based on them doing a really good job at planning to build it themselves.
Right. Okay. And they've got the cash to be able to deliver this.
Yeah, the team managed to raise enough money through some decent financings that will carry them all the way straight through and probably beyond. So they're in a comfortable position, and they were unlikely to come to the market.
So as investors, you think that people should be looking at this because there's still some value to be had. They've got a strong management team, you're saying, the right management team to deliver a company into production. Got cash there, and they're delivering the DFS to let people know exactly how much it's going to cost to actually get into production.
Yeah, no, they check all
good catalysts, I guess.
There are some excellent catalysts, but more than anything else, they have made mistakes in the past. They released some information to the market that wasn't properly thought out. So they sort of released half of a metallurgical result that made the market think that it wasn't economic.
Right. Was it?
It was absolutely economic. They basically released, they had a lawyer who told them they had to release a number off of an early stage metallurgical test that was one part in a sort of 5-part process.
Right.
When that same number was incorporated into the sort of global metallurgical results that came up, that went into their pre-feasibility study, it brought out great numbers. But just that number on its own was misinterpreted by the market, and the share price had a massive tumble. It was being run at the time just by Archie, who was known as a geologist, not as a mine builder. And so the combination of not having a mine builder associated with it and a metallurgical result that made people believe it wasn't going to be an economic mine made the share price tumble, and it's never quite recovered. So the fact that it's actually done all the work it needed to do to become an economic mining project, but that the market hasn't recovered yet, means that there's a buying opportunity there. Okay, so
there's a slight sort of misstep, as it were, but from the company early on. But once they make that clear in the marketplace, and obviously with the price of gold recovering somewhat, you think the future looks good for them?
Excellent, yeah, I do.
Fantastic. Well, again, thanks for the summary about Cardinal Resources. We'll stay in touch and get an update from you soon.
Great.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.